Banks are supposed to be the safest place to keep your money, but is your money truly safe? But before we jump into this video, make sure that you smash that like and subscribe button so this video gets out to more people so everyone can stay informed about this breaking story about the banking industry. Before we get into this video, I want to make something very clear to everyone out there. I don't care about your political affiliation. I don't care about who you voted for. I care to know, is your money safe with the banks that you put your trust in? As you may know, a new administration has taken over and a lot of things are happening. A lot of things are moving at a very fast pace. And one of the things that I'm noticing is a lot of people aren't paying attention to some of these things that are happening while you're sleeping or possibly while you're awake. Now, you may have heard me talk about it before, how this administration has talked about getting rid of the CFPB. That is totally still on the chopping block, but it has not been addressed as of yet. But the biggest concern that I have is what is in store, honestly, for the FDIC. And for those of you out there who don't really truly understand, but the FDIC is who protects your money. Your money is protected in your bank up to $250,000. So if the bank goes under, you're protected all the way up to $250,000. Anything past that, technically, they're not responsible for, but the US government has stated before that they will back that money, but now I'm not so sure about that. But it's really important to understand that the FDIC is just for standard banks. Now, if you have a credit union, your money is protected by the National Credit Union Association Administration. That is also backed and covered up to $250,000. Now, both of these are government entities. Well, technically and not technically, because there are actually independent agencies of the United States, both of them. Now, let me say that again. Both of these are independent agencies of the United States government that manages the actual funds, the actual insurance fund for each one of those sectors. So the FDIC has their own, and then the NCUA has their own fund, and they manage those funds. So in case if the bank goes under, then they actually distribute that money and do as they see fit with it. Now, the FDIC has what are called examiners or regulators. They give them all kinds of different names, but it's normally examiners. The FDIC pulls up, they examine all types of operations of the bank to make sure and ensure that your money is safe. That's their number one job. But let's be very clear now. For the past 4 administrations, this has been an issue that there are not enough examiners for the FDIC. So there's just not enough examiners to protect your money out there. And this is what can cause an actual bank failure. And to make things even more difficult, because technically this is a higher ranking job, so the hiring process is much more longer and it takes way too long to get these people in there. And then on top of that, a lot of people are like, I don't even want to go through this hassle, which again is going to create an even bigger problem, because if you don't have enough examiners, who's checking the banks? Who's monitoring them to make sure that they're not doing anything crazy with your money? A little secret between me and you, the money that's in the bank that you're borrowing is actually technically your money. It's not the bank's money. And it's mind-blowing to me that all of these creators and YouTubers are not talking about this, because this is a serious issue. On January 28th of 2025, this year, the FDIC and OCC rescind job offers to over 200 examiners. Basically, all of these qualified applicants that are actually interested in taking these jobs got offers, and then they all got rescinded, and they're like, yeah, sorry, there's a hiring freeze in the government right now, so we can't hire you anymore. Hence, we're right back at the same problem. We don't have enough examiners. Who's watching your money is the big question. If they don't have enough examiners, nobody. A really good bad example of what can happen is when SVB went under. That went under because there were not enough bank examiners. Exactly what we're talking about right now. That was only one bank. So what happens when a bank goes under? You lose your money, and then it's up to the FDIC to distribute the funds accordingly per whatever order that they choose to give you your money. It isn't like, let's say as an example, if you had $250,000, they're not just gonna hand you over $250,000. That's not what happens. They will actually disperse it to you over time, because it's dependent on what's in the insurance fund. But this was a very rare case where the Biden administration stepped in and made everybody whole. That's not normal. I wanna stress that to you, because the Biden administration had to make sure that we did not lose any confidence in the banking system for Americans, because Americans would just run to the banks and pull all their money out, and then that's what would cause a depression. And for all the history buffs out there, yeah, that's exactly what happened. Everybody did bank runs and they caused the depression. That's not what we want. So that's why why Biden had to step in and actually give everybody that money, even though like we technically don't have that money. Last part's the most important. And then now the Trump administration sends out all these exit package offers to tell people like, listen, if you're not gonna come back to work to the office, then you can go ahead and resign. We'll give you this package, we'll give you this deal, and you're gone, finito. But here's the crazy part. Why is he offering so many people in so many different areas of the federal government to just walk away? Let's take a look at this other article right here that's kind of leading into this whole situation. Exit packages and defunding push may drastically reshape financial regulators. Who are the financial regulators? The FDIC and the CFPB. All those employees that work in both of those two different entities also got the option to resign. They call it the deferred resignation. But let's scroll down a little bit lower. You'll see that the White House is expecting 5 to 10% of federal employees to take the option to resign and be paid through September. Assume the 10% and you can see the staffing impact of a department that already isn't like crazy highly staffed. But wait, it gets better. In the meantime, as staffers presumably will be resigning en masse by the end of next week, Republican Texas Senator Ted Cruz introduced the Defund the CFPB Act. To make a long story short, they want to defund the CFPB and make sure that it gets $0 of funding from the government. But wait, you have to hear this statement. In a statement, Cruz contended that the CFPB is an unelected, unaccountable, bureaucratic agency that has imposed burdensome and harmful regulations on American businesses, banks, and credit unions. It is an unchecked Obama-era executive arm, and the Federal Reserve should not be transferring funds to it. Like what? So you don't want Americans to be protected? Is that what you're telling me? Now, I don't know if you're seeing this as I'm seeing it, but the way that I'm looking at it is we are going to move into a sector of deregulation in the banking system. If you paid attention, and again, I'm not trying to target this, but it did happen, Trump released an actual crypto coin. And then right after that, he released another coin. Well, technically his wife released the other coin. This is going to be an era where deregulation is going to be huge. Crypto is going to move. It is going to be pushed into a different sector, and you're going to hear a lot about it, and there are going to be millions of people that become millionaires overnight. There are going to be a lot of people that are going to lose a lot of money also. But if you paid attention to one thing, nobody is talking about the credit union sector. Because remember, the FDIC is what manages all regular banks, right? But the National Credit Union Administration is the independent agency that manages credit union, and they were not mentioned in any of this, which is the silver lining on this really dark cloud. So there is good news. The good news is, if you're with a credit union, that may be the best place to protect your money at. Until someone looks around and says, yo, what are we doing with these credit unions around here? Then we're in some big trouble. And I've been saying it for a long time. Your money is not safe with these big banks. You need to put your money into a credit union. I'm not being paid by any of these credit unions, but I'm telling you, the situation and your financial future is completely different when your money is with a credit union. And listen, I didn't make this video to fearmonger you or to scare you and say, oh no, take your money out of the banks. No, I want you to protect your money, because at the end of the day, we truly don't know what the intentions of this administration are with these banks and these regulations and all these regulators and examiners. If we don't have examiners, we have a big problem. Keep your money in a credit union, and don't just put it in one credit union. You should have at least 2 to 5 bank accounts. I know that sounds crazy. But I'm just saying, don't put all your eggs in one basket. Go ahead and bust out a pen and paper out so you can write down all of these credit unions and figure out how to join them to protect your money. Now, they are not in any specific order saying that one is better than the other. I'm just going to shoot them off the list. Now, coming in is Navy Federal, Andrews Federal Credit Union, NIH Federal Credit Union, Langley Federal Credit Union, NASA Federal Credit Union, DCU Federal Credit Union, Apple Federal Credit Union, Patelco, Liberty Federal Credit Union, and Dover Federal Credit Union. Now, I think there's an issue with joining Apple Federal Credit Union. I think we may have abused that one a little bit out there. But I hope you understand the severity of what's going on here, and I want you to understand to protect your money. So I hope you enjoyed this video. We gave you another good one on all the banking issues that you need to know to keep your money safe. Now, make sure that you watch this next video, because it is about a massive lawsuit against Cash App that you may want to actually learn about. And if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.